See, each and every marks counts, and we are not afford to lose any of the marks. And my aim is that you should maximize your marks, especially in DT, that you should not make silly mistakes, you should not make presentation errors, you should not make those mistakes which you can easily avoid. So let us discuss some common mistakes which we do in our DTAA question, section 90, 90A or 91. What are the common mistakes which I have seen from my experience that people are making, and unnecessarily they are losing their marks. See, if I tell you, the first mistake is that the people don't read the question carefully and unnecessarily they lose their marks. If I give you the example of July 2021 paper, so the paper, the question reads as follows. Naveen is an individual resident in India, age 52 years, normal, earned royalty of 15 lakh rupees from XY Inc. Canada for writing articles in journals and newspaper for the year ended this. So 15 lakh he received. So what students will do? They will make the income as 15 lakh rupees. But it is written there, however, he received only 12.5 lakh. So you will say, what happened then? So out of 15, 12.5 has been received, but still my income is 15 lakh, right? So mostly because our mind always says that on due basis, the income would be taxable. Here it is specifically written that he maintains cash system of accounting for the royalty income. He maintains cash system of accounting. And we understand there is a section 145. Even if you don't remember the section number, but you understand that PGBP income or IFOS income, they are taxable. What is the basis of that? The basis is as per the method of accounting followed by the assessee. So if the assessee is following cash basis of accounting, so we have to consider only that income which is received actually during the year. So although he earned 15 lakh rupees, but he received only 12.5 lakh rupees. So this is the one mistake which can easily be avoided. Please don't take 15 lakh in that case. Please only take 12.5 lakh. And second mistake which many students make is that they see royalty. Oh sir, he is receiving royalty income. So they will apply section 80 QQB also. Let's say the assessee is following optional regime. So they will apply QQB also. Because we understand, sir, on royalty of books, there is a section QQB. Guys, you should remember that it is QQB is not for textbook. QQB is not for writing articles in newspaper or magazines. So here, this person got this royalty and he is writing articles in journals and newspaper. So do you think QQB would be applicable 80 QQB? The answer is no, it will not be applicable. Correct? So this is the mistake which you can easily avoid. Why I am discussing this? That if this types of adjustment will come in your examination, you will be able to make it. Yes, this was there. So I should proceed very, very carefully. The third mistake, see, these are all reading mistakes. And I'll give the classic example. See, here it is written, he further received 3.5 lakh during the year as dividend from X Limited, an Indian company. It's an Indian income. So 3.5 lakh will make it an income. But see what is written. See how smartly examiner has written he received 3.5 lakh rupees. So we understand that there is a TDS on dividend also 10%. So when we say that he received, it means that he received after dividend. After the tax on dividend. So 10% would have been the dividend. So how much it would have been? This is actually equal to 90%. So you have to gross it up. So we always take income on gross basis, right? So actually 3.5 lakh is net. It is 90%. So 3.5 lakh divided by 90%. So you should gross it up and it will become 3.88 something, right? So these are the mistakes this is the first mistake, and these are very common errors which you can easily avoid, and you can get, if you avoid it, you can score very, very high in your examinations. Okay, I'll tell you the second mistake. Second mistake mostly students does is while calculating their doubly tax income, which is very, very common. I have seen it in case of many students. They make this mistake in case of calculation of doubly tax income. See, because you understand the relief would be there only on the doubly tax income, correct? So what will happen is, let's say for example, this is a question from ICI material. Here the assessee is getting agriculture income from country N. He is getting dividend income, royalty income, and expenses on earning royalty, business loss in country N. So there is a business loss also. See what happens, it is written, so examiner will confuse you. What will examiner say? The domestic tax laws of country N does not permit set off of business loss against any other income. So they will say that, sir, on this we have not paid any tax, and it is also, these losses are not allowed in the foreign country. So this is not a doubly taxed income, right? So, and the rate of income tax in country N is 18%. So in that country, the rate is 18%. Guys, but in India, if you have losses, let's say if it's a business losses, so loss from one business can easily be allowed from the profits of other business, right? And it does not matter that it should be the same business. Assessee is carrying any number of business, so it can easily be settled now, unless and otherwise it is a speculative business or a specified business where there is a restriction. Otherwise, business losses can easily be set off. So please tell me, let's say this person is having a PGBP income from India, 8.5 lakh. And he has a business loss in country and 1,10,000. So this 1,10,000 business loss can easily be set off from here. Correct. So please tell me his foreign income, or in fact, I can say a negative income, he is actually saving the taxes over there. So what is a doubly tax income? So whatever the dividend he is getting, whatever the net royalty he is getting, right? So this you should also subtract. So what students make the mistake, they, while taking the doubly tax income, they don't take this. Guys, please consider this also. Please consider this. I have given you this PDF. If you want to go through this PDF also, you can download the application. It would the link would be in the description. You can easily download it. But please remember that your losses, which can be set off from India, this will also reduce your doubly tax income. Correct? Let me come to the third mistake. Third mistake is very technical. Students don't actually apply the foreign exchange rate correctly. They forgot to actually realize the importance of Rule 115 and Rule 128, which is very, very important. Because in double taxation question, there is a major chances that you will be getting any foreign income, and that to be, let's say for example, examiner is giving you in foreign currency. So you need to convert it. So guys, 115, specifically 115. 128 is comparatively easy because there is only one rate, but 115 you should remember. See, if it is PGBP income, if it is PGBP income, if it is house property income or other sources income, these needs to be translated at the exchange rate which is prevailing at the end of the previous year, right? So for house property, PGBP or other sources, in fact in other sources, I'm not taking dividend income and interest on securities income, because for that the provision is different. So please always remember that if you are earning income from house property, PGBP or other sources, provided it is not interest on securities or dividend, then you have to take the exchange rate which is at the end of the previous year. However, let's say for example you are getting income from outside. Let's say it is salary, right? If it is salary income or capital gain income, or in fact interest on securities or dividend income, in these cases you have to take the exchange rate which is prevailing a month before, right? Let's say for example you earned the income in the month of February, so you have to take a month before. It is what? January. So what is the end date of January? 31st January. You have to take the rate for that. So please don't make a mistake over here. This is the commonly mistake I have seen in taking the exchange rates, especially Rule 115 and Rule 128. So you should be very clear with these rules, that what is the exchange rate you need to apply. Correct? The fourth is actually a theoretical question problem which you can easily avoid. See, what happens is, whenever, this is the question number 4, this is again from the study material. See, this question says that there is a person who has earned income, he is a foreign national and he has earned income in India. So by source rule, we will tax it in India. But he is a resident of, let's say, country X. So he is a resident of country X, he is earning income in India. Now, the Income Tax Act says that any income which is earned in India is taxable in India. This is what Income Tax Act says. But let's say the DTA is saying, that it will be taxed only in the residence country, not in the source country. So now this agreement, they have given this, that the DTA says that it will be taxable in the residence country, not in India. So what you will do, this everybody knows that, sir, in this case, whatever is more beneficial, that would be applicable. So DTAA would be applicable. Very nice. Guys, and most 90% of the students will write only this, that this is applicable. They will forget to mention that if you are taking the advantage of DTA, please do mention that we require a tax residency certificate also. So please, the requirement of taking that benefit, if you are taking the benefit of DTAA, so this is again what is required. So let's say, for example, the question is of 4 marks, and if you will write now that whichever is more beneficial, and you will think that yes, I have answered the question properly. No guys, you have actually answered it only half. The half marks you will lose because you will not mention the requirement. This is also very important. Please mention the requirement that this person has to produce the tax residency certificate, and not just TRC. There is some other information or particulars also that he needs to be furnished, like the status of the assessee, PAN number, national PAN if available, the nationality of that person, tax identification number, period of residential status, etc., which are not mentioned in TRC. That is also needs to be furnished. So the problem is that students will not does not mention this, that TRC is required, other information is required. Guys, please do mention it. And the last and not the least is your presentation. Please guys, be very particular about the presentation. This is CA final examination, and in fact it is not at all difficult. You will see that it's not at all difficult. First of all, let's say if there is any question, specifically theoretical questions or anywhere where you need to comment. So first of all, your answer should tell the issue, that what is the issue involved in the question, right? Second thing, it should tell the provision, that what is the provisions which you are actually applying in that question, and then your conclusion. So please make your answer very systematic. This is what is expected from you, and I'm telling you, with little practice now you will get to know. So first you should tell the issue involved in the question, what are the provisions applicable over here, and then you can actually give the conclusion, that what is your conclusion. Guys, I have drafted these questions in such a manner so that you can easily, so I have not just copied paste all the solutions from the institute suggested or institute study material. I have made it so that what exactly the examiner is demanding, correct? So my entire question bank is formed in such manner only. So if you want to download this PDF, you can easily download. The link would be in the description. And I am sure that you will try to avoid all these mistakes in your examinations. All the very best, guys.